Welcome back to the Crypto's Key Conversation. We're going to quickly talk about what we're going to cover throughout this video. So we're going to be covering CPI and inflation and kind of what's going on within our markets. We're going to be talking about McDonald's adoption of NFTs and metaverse. We're going to be talking about JP Morgan and Biden executive order, CBDCs and NFTs, Binance's partnership with Forbes, $200 million worth, and a bunch of the crypto jobs that's been offered as of recently. We got a lot to cover, so I'm going to try to be as brief as I possibly can. Jumping into CoinGecko here, we're currently sitting at a $2.09 trillion market cap, currently down 1.8%. Looking at the top 10, Bitcoin sitting at 44,504, Ethereum sitting at 3,125, Tether's Tether, Binance Coin sitting at 421, XRP sitting at 85 cents, Cardano sitting at $1.17, Solana sitting at $1.09, Dot sitting at $20, and Avalanche, who finally flipped Terra, is sitting at $91. Coming over here to the Bitcoin Fear and Greed Index, we're in this neutral range, which is at 50. We're dead smack in the middle. So it's good that we're not in their fear and extreme fear range like we have been in the past, so we have a lot more optimism and positivity, but there's still a lot of uncertainty in the markets. And we're going to start with some of that right now. So finally, the CPI has come out, and obviously this has been huge in regards of Bitcoin in the crypto market and just kind of what's going on in our economy. So it says from CNBC, it says inflation surges 7.5% on an annual basis, even more than expected and highest since 1982. So obviously 1982 was in like the 14% range, and we were just a couple points lower than this. So it says the key points from here says the consumer price index for all items rose 0.6% in January, driving up annual inflation by 7.5%. That marked the biggest gain since February 1982. Core inflation rose 6%, which also was a notch above expectations. Real earnings for workers increased just 0.1% on the month when accounting for inflation. Weekly jobless claims declined to 223,000, below the 230,000 estimate. So obviously there's a lot of just fear and uncertainty of kind of what's going on with Jerome Powell and the Fed, and kind of are they going to take a more hawkish or dovish approach to interest rate hikes into the market. So obviously in the past here, we were at 14.4% and we're currently sitting at a 7.5%. So we're up. So continuing on here, looking at the CPI stuff, so it's saying the biggest increase. So increases in the indexes for food and electricity and shelter were the largest contributors to the seasonally adjusted at all items increase. So you can come down here and kind of check out all this information, but I kind of pulled up this chart and I wanted to show you something. So this is all items, meaning all these categories right here. And as you can see over time, looking over year, we've been just on a consistent uptrend here. But if I take this off and I just look at food and electricity, I mean, look at that. Let's just look at food really quick. Look at food. I mean, think about the lower class and middle class. When this is huge. And now you look at like electricity. Look at that, just straight vertical. It's almost like parabolic-ish right there, or forming parabolic. So a lot of this is a lot of concern for, especially like the lower middle class, and a lot of investors, and just all investors in general. That's why you're seeing some of that uncertainty within the market. And even if we come over here to the Bitcoin, let me show you this really quick. If we come over here and look at the Bitcoin chart for the 24-hour period, I mean, just so much volatility. Look at this. I mean, we were sitting at 45,000 and quickly jumped down to 43,000 and then shot all the way back up to almost 46,000. So as you can see, people are trying to anticipate, and there's a lot of volatility, a lot of fear going on, people selling off, people accumulating. There's so much going on. So moving on here, it says analysts weigh likelihood of March rate hikes as CPI disappoints again. As inflation continues to rise more than expected, analysts consider what the Fed might do at its next policy setting meeting. Inflation woes have already been priced into the market, analysts say, but the rate hike speculation continues. So that's what I was saying. Like, I mean, you would think at this point everything should be priced into the market, but like with this speculation continuing, obviously that's contributing to the volatility that we're seeing within our market. So it says, this is Joseph Wang here, says, I suspect that they're going to be very aggressive. So I'm taking a hawkish approach, maybe one hike every meeting, maybe even 50 basis point at one meeting in the future. And then it says the odds of a 50 basis point hike in March is about 27% according to the Fed Funds Future. A 25 basis point hike is about 73% likely. So who knows how aggressive they're going to be in this interest rate hikes. We can definitely expect some sort of interest rate hike, and hopefully it's all programmed into the market. Yeah, there may be a slight, a little bit of volatility here and there, but like hopefully it's all programmed and they're not, overly aggressive. Obviously they got to combat and get a handle of inflation and what's kind of going on, but just the uncertainty, the markets really aren't liking it, and it's quite evident. We've been seeing that over the past, couple months. So continuing on here, obviously we talked about the FOMC meeting. So this is, their meetings to kind of discuss what their plan of attack is when it comes to inflation and interest rate hikes and stuff. So the next one's March 15th and 16th. So we can definitely expect a lot of volatility kind of leading up to this and kind of see what happens after this. Looking over here, Dow drops 500 points on the fears that Fed will be more aggressive to contain surging inflation. So we talked about inflation, and what is the best hedge as we got in today's society to hedge against inflation. And Blockworks had hit it. Charles Schwab, 26% of surveyed traders plan to buy crypto as a hedge against inflation. So we've been talking about this in all of our videos. Is Bitcoin and the crypto market seen as a great hedge against inflation. So obviously, as inflation keeps spiraling and just keeps going higher and higher, more and more people are going to see the writing on the wall when it comes to Bitcoin and the crypto market. So that's going to, obviously have an effect. Yeah, the negativity will have an effect on our market, but it's in a sense good for Bitcoin and the crypto market, seen as that hedge against inflation. So I wanted to come over here. Eleanor Terry was talking about the administrative executive order on crypto that a lot of people were kind of speculating about and kind of freaking out. What's Biden and his administration going to do in this executive order action? And she had a tweet thread that says some interesting insights of the administration's impending executive order on crypto from a former government official. It's more about it's more of a bottom-up approach than a top-down, meaning the agencies, the SEC, the CFTC, and so on, go to the administration and say, hey, we need an executive order. So we can do the things we want to do in this space, devote resources away from things that may be on the formal agenda, as opposed to an admin telling the agencies what they should be doing. Often executive orders are circulated to the agencies for their input and advance. Any guidance in the order will likely come with input from the National Economic Council, the Treasury, and the SEC. No further insight from this person on the timing of this thing, but it's likely the administration is waiting for the agencies 2 cents before releasing. So we talked about how the Biden, people were saying, oh, they're going to come out with this executive plan, in a couple weeks. But if you were look at the information that was put out and that was known, they were saying they were going to collect data from these agencies on the back end, the second half of 2022. So obviously Biden administration, they may start formulating a sort of plan, but they're not really going to have anything set in stone until they get the information they need. So this is kind of further pushing that agenda. So who knows what, this executive action is going to be in the crypto space. I highly doubt it's going to be something super negative, because now you have, Russia doing a complete 180, completely buying into Bitcoin in the crypto market, as well you have other countries adopting it, all these other entities that are adopting it. So the crypto market, and when it comes to the US, they're not going to want to fall further and further behind. We're already behind the 8 ball. So as a world power, as a strong country, I highly doubt they're going to push this innovation further away and allow this technology to be fully adopted and fully supported somewhere else. So we'll see. It's just kind of a waiting game. Everybody's just kind of speculating. So moving on here. This is an interesting video from Tom Emmer. So we talk a lot about CBDCs and, overreaching government, and we don't want, the government in all of our business, knowing everything we're spending our money on, what we're doing with our money, yada, yada, yada. So this is Congressman Tom Emmer says, financial privacy is the whole definition of freedom. Congressman Emmer chats with me about CBDCs leading us further down it's this Orwellian surveillance path and why we must not allow the Fed to issue one to consumers. So let's take a listen into this.
The biggest fear that our government has, Naomi, is being cut out of the process. The beauty of where we're headed with cryptocurrencies, with blockchain technology, is it eliminates the middleman. This is the federal government telling us that we have to give all of our personal information because that's the only way our government can protect us. I don't need my government looking over my shoulder on everything that I do.
So, I mean, straight facts. I mean, we really don't need that. Yeah, we need investor protection. We want to make sure that these, platforms and these, organizations, have the investors and the customers, interests at, as a priority, as an investor protection, even, not even stifling or hindering that particular entities or those platforms' ability to be innovative and to grow and be prosperous. But it's like, we don't need you kind of overstepping and overreaching in all of our business. So that's a great point. We talk a lot about that in our past videos as well. And I've touched on this earlier, and I just think it's so important that I wanted to bring it up again in this video. Okay, so this is from Ripple, but it's talking about, NFTs and CBDCs and just the crypto market in general, what it has to offer. So it says, from NFTs and CBDCs to crypto liquidity, payments, and compliance, our newest report provides a fresh perspective on the global use, benefits, and perception of crypto solutions. Coming out here says, blockchain and digital assets are changing the value the way the internet changed information by creating a vast decentralized network that is driving new efficiencies, capabilities, and even new industries. As blockchain and cryptocurrencies mature, an increasing amount of businesses are leveraging them in various ways, and more consumers both understand and own digital assets. With increased consumer adoption comes high expectations within institutions, businesses, and governments for wide-scale adoption of blockchain, crypto, and CBDCs. Wide-scale adoption of blockchain, crypto, and CBDCs. So this hits it completely on the head. People are seeing the writing on the wall. You have massive corporations, institutions, hedge funds, countries, cities, states, agencies. Everybody's starting to see the writing on the wall when it comes to our future. And digital assets in the crypto market is there. It is our future. So with this being said, the crypto market offers so much to change how our life flows, how we interact with one another, how we transfer information and value to one another. So this is absolutely massive. And it goes into everything we've been talking about from, the dominoes are already falling, okay? And it's only going to pick up speed and momentum. There's so much adoption happening. And we're going to come talk about it right now. So one of the big ones, Binance invests $200 million in Forbes to boost consumer knowledge on Bitcoin. So we talked about how important it is for people out there to get educated. There's millions of people sitting on the sideline that may have heard of crypto and may know a little bit about Bitcoin and Ethereum, but they think that's it. They don't really know what the crypto space has to offer. So this is absolutely massive. And Binance isn't the only one doing this. You have Coinbase platforms. There's a bunch of platforms out there and schooling and educational institutions that are offering blockchain and crypto learning platforms to where they can educate people about it because they see that this is our future. So we have to educate people. It says media is an essential element to build widespread consumer understanding and education, says CZ. So coming out here, it says, as Web3 and blockchain technologies move forward and the crypto market comes of age, we know the media is an essential element to build widespread consumer understanding and education. We look forward to bolstering Forbes' digital initiative, as they evolve into a next level investment insight platform. So this is absolutely huge, okay? Just more exposure. And we talk a lot about what's going on with this Super Bowl coming up, and they're calling it the Crypto Bowl. So that's just a reality. They're trying to get as many eyes as they possibly can on their projects and on the crypto space because this is the future, okay? And as you see, millions and millions of people are going to be, watching the football game, watching those commercials. It's just going to entice them to kind of start dabbling and dip their toes into the crypto waters. So once they start learning about, a little bit of crypto here, a little bit of crypto there, they start utilizing platforms like, crypto.com or Coinbase or whatever other platform, Binance. And as they get more comfortable, then they'll start branching out and seeing what the crypto market has to offer in general in all sectors. So that's huge. Coming over here, it says, this is from Blockworks, it says companies hiring for crypto jobs. The NFL, Nike, Hulu, Visa, Meta, which is old Facebook, Apple, Nvidia, Disney, PayPal, Google, Fidelity, Amazon, Microsoft, JP Morgan, MasterCard, State Street, Goldman Sachs, Bank of America, and the list can go on and on and on. It is absolutely happening. Adoption is happening. There's no stopping this. It's just going to keep getting more massive. Look at this. YouTube CEO Susan said last month that NFTs could be another form of revenue for creators. This is absolutely huge. YouTube is a massive platform. So YouTube hints at verifying NFTs and watching games in the metaverse in its platform. So we talk about NFTs and metaverse and how mainstream they've been coming and how much growth and adoption has been happening. It was last time we covered it was at 12 billion. I mean, it's so early. There's so much happening. And speaking of, check this out. McDonald's to join the metaverse after filing trademarks to create a virtual restaurant and goods. It also aims to trademark online, actual, and virtual concerts and other entertainment services within its virtual McCafe. So that's absolutely massive. There's so much that can be done in regards of exchanging value and offering more to the customers when it comes to online and in the virtual world and in the real world. That's absolutely massive. McDonald's is a massive company. And then ending on this, JP Morgan, NFTs will likely dominate the digital asset universe in the future. People are seeing the writing on the wall, okay? There's no stopping this train. The dominoes have already fallen. They're going to keep falling. More adoption is going to happen day after day after day. We are so early to the party. We are so early to the party. Let me go ahead and refresh this. We're sitting at a $2 trillion market cap. The fun hasn't even started yet. With all that being said, stay strong out there. Be safe.